It's a small organization, but it's not scalable. You cannot scale it, and it's not available for everybody. The second organization is Guidance Residential. So they said that Guidance Residential is permissible to deal with because we have gone the extra mile. We did not care about money. We cared about how to help finance. So we, alhamdulillah, got their endorsement, and everybody else who offers, they're either a bank or a subsidy of a bank with a different Islamic name, and they're offering halal financing. But those who stay away from those organizations, this is their saying, right? It says then, um, it says, whoever remains away from it has kept himself safe and protected his faith and honor. So this is something that Amja actually said. Now, in addition to Amja, we have a Sharia board. When we started our program, we invited the scholars from IOFI. IOFI stands for Accounting and Auditing, Financial Accounting and Auditing of Islamic Financial Institutions. So there are these scholars who actually sit in our Sharia board. As you can see, we have Sheikh Nizam Yaqubi, Dr. Abdul Sattar Abu Ghadar, Rahmatullah Alayhi, he actually passed away. We have Sheikh Yusuf Talal Lorenzo from USA. We have Dr. Mohammed El Ghari, Dr. Imran Ashraf Osmani, Dr. Muhammad Daud Bakar, and Justice Muhammad Taqi Osmani, who is the chairman of IOFI. I'm sorry? I cannot hear you. Oh, who passed away? Dr. Abdul Sattar Abu Ghadda. He is right here. Thank you. If you have any questions, I don't mind answering, but I'll just go through quickly and I'll be happy to go over all the questions you have. So these are the scholars actually we have at our Sharia board. Now, we have the fatwas was actually issued by these scholars, and these fatwas are available in our website. And we also have some documentation that Nabil will be able to give you, inshallah. So coming back to what Islam says in riba, right? Allah subhanahu wa ta'ala forbidden riba, but he has encouraged trade. But back then, the money lenders, they say that trade is like a riba. It's the same thing. Selling money for money or selling a product for money is the same thing. But Allah subhanahu wa ta'ala actually forbidden that. Now, we know what the Torah and Bible already said. I'm not going to spend time on that. But we really need to understand what is the riba. Riba is a profit made when someone is actually asking for a loan. And at that time, if you are giving the person lending money, you should not earn any profit in a return. Then it becomes a loan interest. Why? Because that person is in need. When someone is in need, you do not want to profit out of that person's need. Now, riba is the creation of a profit out of nothing. Now, you could give a loan, but you cannot make any profit out of it. But what is permissible? What's permissible is charging a fee for usage. And I'll explain a little bit more that how you can charge somebody for using an asset that you may co-own together, right? And you can buy and sell, you can do trade. Now, here is the methods of Islamic finance that I want to spend some more time on. There are three types of main contracts that is actually used for financing. One is a murabaha, is buy and sell. You can buy a house. Let's say you want to buy a house for $100,000 and you don't have the $100,000. So you come to a financing organization or a bank. The bank needs to buy the house first. So there's a closing cost. Once that person buys the house, the bank, then the bank has to add their profit, let's say $50,000. Now they are going to tell the homeowner that you now owe $150,000, and we will divide the $150,000 into 30 years, and you make the payment. That's called murabaha. But murabaha is not practical here in America. Why? If you ever want to refinance, you want to lower your monthly payment, you need to first pay back the entire balance back to the bank. And then you have to take more against the property. That's the right way of doing murabaha. But if you don't have the money to pay back, you cannot circumvent the agreement. Sharia is very straightforward. You just cannot create a, a open door just to make things work, right? It doesn't work according to Sharia. So murabaha really is not practical. At the same time, when you're doing a murabaha contract, you are creating a debt instrument with the lender, and that lender here in America, they sells it to the third party. It's called selling of a debt. So you cannot sell a debt. Sharia law does not allow to sell a debt to a third party. That's not permissible. So that's why murabaha really does not work. On the right side is ijara. Ijara means lease to own. Many of you lease cars, right? So you are leasing for using, and it's a legal term, usufruct, that you're getting, meaning that you are enjoying the same right of the ownership, but except you don't own, you use. Who owns it? The owner of the property. Now, here in this country, the owner of the property is not a bank, the seller from whom you're buying. A bank cannot own the property, but there are companies, banks try to do this. It's actually a shortcut. It's a lot of violation of Sharia, so you cannot do it here in the USA. What you can do is musharaka. Musharaka is the program that's permissible because you are co-owning a property together as partnership. But it's not just any kind of a musharaka. There are different types of a musharaka. And that musharaka is right here. So there are two types. The one that's marked in yellow is shirakat al-milk, which is joint ownership. The other type of a musharaka is called shirakat al-aqd. Shirakat al-aqd is where it's a business ventureship. You and I want to get into a business. We'll start a supermarket. We are 40, 60, or 50-50 partner. Our profit and loss is according to our ownership, and our partnership will continue until we decide to walk away from the partnership or buy one another out or sell it. That's shirakat al-aqd. But shirakat al-milk is actually used in format where you are not going to be a co-owner and own an asset jointly for unforeseeable time. There has to be an end date, and one needs to buy the other one out. And how does it work? So shirakat al-milk has two types. One is the optional, and the other one is compulsory. So the optional and compulsory is, the first one I'll explain the compulsory. We all know that, inheritance happens when someone passes away. So let's say parents pass away and they pass the property to their children. Now the siblings end up owning the house. How did they become owner? By the original owner or the parent's death, right? So that happens automatically. That's compulsory. So now siblings became co-owners by default. So that's compulsory. The other one is actually optional. Optional is that you could actually co-own together, similar to the siblings. And that's the program that we use. And how do we use it? I'm going to come to that. It's a video over here, but I'm not going to play the video. I know that the sound system, there's some technical issues. I'll explain this to you. So what happens is that when you want to buy a house, Guidance Residential will create an LLC. We are able to create an LLC because we are not a bank. So because we are a private company, private investor, we create an LLC, and that LLC becomes a co-owner with you. You want to buy a house, we are now co-owner with you. You come up with a 5% down, 10% down, the rest of the money comes from our asset. We buy the house together, and then what we do, we give you a payment plan. And the payment plan tells you each month you are going to buy this much of your share, and you are going to pay us a rent for remainder of our share that you just used previous month. because we also own the house with you and you still did not buy our share. So you need to give us a profit or a rent. Next month, your ownership increased, our ownership decreased. So you are still making the same payment. And then we're also taking a little bit less rent from you than the previous month. And a little bit more money has gone towards your share. So that's how you follow the schedule for 30 years. And then you buy us out completely. Now, obviously, because you are paying us a additional rent or a usage fee or profit, whatever you call it, that is additional fees that we are making as a profit because we are helping you purchase a home without taking a loan. Now, you do not have to continue this for whole entire 30 years. You could actually pay us off at any time. For example, let's say you kept the mortgage for 6 months. The profit that you paid us for 6 months, that's all is our profit. You do not have to pay us the plan, the whole plan, because you just bought us out, right? So that's how the program actually works. Now, this is a little bit of a visual example just to give you the difference between the co-ownership, right? So you are the buyer, what I just explained to you, and you buy the house with us. As you can see, let's say you put 30% down, 70% starts with our ownership, and then you keep making a monthly payment. Your ownership increases and our ownership decreases, and you become 100% owner. And the other way, if you go to the regular bank, you take a loan, you're 100% owner of the house from the day one, but you have a loan on your shoulder, something that you personally have guaranteed. You have taken a guarantee of personal payment, right? If you're not able to make a payment. And you pay off the loan plus the interest with the regular bank. And then you pay off the loan at one point, and then you become a loan free. So that's the difference with the conventional bank. Now, what are the benefits of this Musharaka program? First of all, there's a capped late payment fee. We did a research when we started our program, and we found out that it does not take more than $50. It doesn't cost more than $50 for administrative fees when our customer is late in making payment. Why? Because we need to maintain the property tax, the homeowner's insurance, the escrow account, if there's the envelopes, the dealings, because the customer is not making payment, it doesn't cost us more than $50. So our fee is capped at $50, and it will never compound. Typically, the regular bank will charge you 5% of the missed monthly payment. Second month, they will add the total. They will charge 5% on the entire amount. Third month, so it continues to compound. It doesn't happen with us. And with us, you're just behind a month. The other benefit is a non-recourse. What does non-recourse mean? Non-recourse is when you are defaulting and you're not able to make the payment, and we decide to sell the house and we part away with our agreement. At that time, what happens is that we do not have right to go after your other assets. You might be owning another property. You might have 401k. You might have college funds for your kids. We will never come after those. That's called non-recourse. Typically, regular bank has what is called recourse loan. Remember I said personal guarantee you are giving when you're buying a house? So you are signing an agreement that in case you're not able to make the payment and you go in a foreclosure, the bank has every right to come after your other asset, although those assets has nothing to do with the agreement of the property for which you are taking the mortgage for. So that's a recourse and non-recourse. Then we have a shared risk. The shared risk is pretty much in the event of a natural disaster, something that's an act of God, right? We have no control what Allah subhanahu wa ta'ala wants and what happens. If, let's say, there's a disaster and the property has a damage and your homeowner's insurance is not covering the full amount to repair that damage, at that time, let's say the insurance company gave you $50,000. But to repair the property for you to make it a livable condition is costing you $80,000. The gap of a $30,000, if that's not paid for, where are you going to go? We will actually share that unpaid $30,000 according to our ownership. If we are at that time 50-50 co-owner, we will pay you, write you a check of $15,000, and then the rest you will use to repair your property. The other benefit you have is called eminent domain. Let's say the government would like to use your property for the public benefit, and they decide that your property is the right property for them to use. It's called eminent domain. It's a law that exists in this country. The government has the right to come and buy your property from you at the price that they think is valued at. Oftentimes, it's not the market value, and sometimes it's not, doesn't even cover the mortgage you may have, you may owe. So if you have a mortgage with a regular bank, let's say $400,000, and the city decides to give you $200,000, you actually have to do a short sale, and the bank has to forgive you $200,000, and the money from the city goes directly to the bank, and you walk away with zero, and plus your credit has a dent because you had to do a short sale. With us, what happens is that if there is a $400,000 balance, same example, Guidance Residential will first take the $200,000 from the city, will split between you and Guidance first, according to our ownership at that time. So you get something out of it. And then if there's a loss for Guidance book, we do not come after your other assets. So those are the other shared risk as well. And then we have no prepayment penalty. If you pay us off at any time, there is no prepayment penalty with our program. And here's an example of how much it costs to finance a home. All of you really wanted to know that, okay, get to the main, right? How much would it cost me? So as you can see, here's the payment. So it's an example of 15-year, $100,000. I believe it's a $100,000 example. Yes, it's $100,000 for 15 years, and our rent profit rate is at 5.75%. So as you can see, your first payment starts with the scheduled payment of $830. As you can see, every single month, your monthly payment is $830. But the difference is the first month, $351 will go towards your share, and $479 will go towards our profit because we co-own the property, and that's the profit that we are charging you. Then your ownership increased because you started, an example here, 20% down payment. So your ownership increased 20.28%. And then there's a balance. You carry that balance next month. And as you can see, you're still making same $830, but the acquisition portion, it increases to $352, and our profit is $477. And fast forward, as you can see, $475, $460. This is the 100. This is the 60th month, $364, and $120, and this is how it ends. And you will realize that you have paid us a total of $49,473 if you maintained a very minimum payment for 15 years. So that's the profit we're going to make in addition to that $100,000. So that's our profit. So now there are some misconceptions. A lot of people think that we actually take a loan from Freddie Mac. So I wanted to cover this. I'm almost done with my presentation. This is about some of the myths that I wanted to clarify. So people think that who's Freddie Mac? We deal with banks all the time, but we just say something and then it's not halal. So Freddie Mac and Fannie Mae is a government entity chartered by Congress to help the banks free up their money when they give loans. So they are owned by the government right now, Freddie and Fannie. So 21 years ago, when we went to them and we told them that, hey, you know what, we're going to co-own properties, and we want you to buy those halal contracts from us because you buy mortgage-backed securities from the regular banks, treat us like them. And they said, are you out of your mind? Banks cannot own properties, so you cannot co-own a property. So we went back and forth. That's how we spent that $25 million, legal fees and scholars. And finally, we were able to get an approval after 3 years. Why? Because we chose not to be a bank. Because if we became a bank, and we easily could, we are a multi-billion-dollar company, but we chose not to become a bank because the moment you become a bank, you have to deal with the federal government. You have to take anybody deposits $100. You can actually take $900 loan from the Fed against that $100. The fractional reserves and all that. That's a different topic I'm happy to go over with. But if you want to follow me, you can follow me on social media. That's a series that's coming up that I actually help our community to understand how that works. But coming back to this is Freddie Mac's job is to buy contracts. They're a secondary investor. So they buy contracts and then they package it and they create bonds, they create retirement products for corporations to invest in, because 30-year is the most safest investments out there. So different organizations would buy into it. It's a profit-making vehicle, right? So what we are doing, we are actually injecting a halal contract into the system. So what's happening is the contract that we are creating with our customers, and that halal contract Freddie Mac is buying because they see it's a profit. For them, at the end of the day, how the contract is made doesn't matter. For them, what it makes sense is the return of their investment. And that's and how secure it is for them. And our product is far more secure because we share a lot of the risk with our homeowners. So that's Freddie Mac. And so Freddie Mac is not a bank, they are not a lender, and they do not lend money. They are actually just like an investor. Anybody else could have billions of dollars, trillions of dollars. They could actually buy into our program. It's simple as that. And a lot of people also ask, who is a US bank? So when I joined, Nabil and I joined back in 2011, back then we had a servicing company because we have, mashallah, thousands of customers, but all those accounts needs to be serviced. So we had this company who were doing servicing, but they were falling behind with making the tax payment on time, and our customers were getting a mail saying that your property tax is due, things like that. So we had to make a decision that to have a bigger company to do servicing for our customers. So we did a research and we found that US Bank, even though they're a bank, they also run a servicing department for any investors to do servicing for accounts, mortgages. So we hired them to pay them to do servicing behalf of us for our customers. So they actually answer phones for us. We went there, gave them a training. There are 3 or 4 employees are there within their operations, and all our statements that they actually stuff envelopes and they actually collect the payments for us and they deposit into our account. So they actually do the servicing for us. There's a regulation that governs any company, could be a servicing, by the way. So, there are some laws that's related to that because it's people's money, right? So that's all they cover. Other than that, US Bank is not affiliated with Guidance Residential. They are not a party to the Musharaka. They are just a third party who does the servicing for us. Other than that, this was another video that Guidance is not a bank. But with that, I'm going to end my presentation. It's already 8:40, right? So we'll go ahead and start the Q&A, inshallah.
Assalamu alaikum wa rahmatullahi wa barakatuh. Jazakallah khairan for this. This was very helpful. I had 3 questions, so I'm going to go with all 3. So one was, in the case of a default, home goes to foreclosure. Does home sale get split between the 2 owners? So that's one. Two is the rent or profit impacted by credit, the same way, if you will, a bank loan. And then three, the question about Freddie Mac, you brought it up, Ali Barak Feek, thank you. What would be the response to Freddie Mac? Generally speaking, will probably be making their money off of interest, and that's the money that's used potentially to be purchasing contracts, right? So now the investor is no longer an Islamic entity. It's an entity that's making money off of, I hope I'm not killing it. I'm very interested in the product, but of course, these are my questions.
Sure, welcome. So the first question was, what happens when the property is default, and what happens? So number one, if I'm going to give you two scenarios, right? One, let's say you're not able to make the payment. What we do, we try to work with you. We give you time. We actually are human. We do call. Let's say Nabil did the financing for you. Actually, Nabil is the first one who's going to give you a call, just so you know. Typically, regular banks don't do that. You have somebody from somewhere, toll-free or block number calls, but you're going to be hearing from us. And then we want to hear from you. We are human. We want to be as human as possible. We speak to you. We try to understand. And this has happened, by the way. I've been involved. And we speak and we find out how things are going and what it is. And we try to work out. You say you need 6 months. We're going to give you 6 months. You say 1 year. We're going to give you 1 year. We want to work with you. Okay? Let's say at the end, we say, hey, look, we are also suffering with you, right? So we want out. Let's sell it. So we agree to sell it. And we sell it. The law tells us if a property is financed by a financier, it just cannot be sold just like that. It has to go through a system in this country, through the court. That's the system. Just so you all understand, it's not just dealings, come to the office, sign some papers. It doesn't work like that. It's a system in this country. So we go through the foreclosure. Two things can happen. We sell it for more than our share remaining, or sell it for less. If we sold it for a loss, we do not come after your loss, but unfortunately, it's your loss. But you say, no, I still want $20,000. I want to walk away with something that has been done also, just so you know, okay? Just to clarify, it doesn't happen. I was also involved in that with one customer back in the days when I started. The other situation is if it's sold for more, we do not claim the profit. We only take whatever was our share, and that's about it. That's the first question. Second question.
So I want to get into the detail of this question, right? You said when you get the same money or less money, right? Is that going to be shared according to the percentage ownership at that time, or you get the preference and take your money out first?
If it's sold for more, let's say the balance, our balance is remained 300,000, and we sold it for 500,000.
No, I'm talking about the other way around.
Oh, sure.
If the balance was 300,000 and current equity of the owner is 60% and yours is 40%, the equity ownership when the default happened, right? But still now the owner, you make 300,000, right? Will you take only 60% of 300,000, or you still take that 300,000 because that's the money that is owed to you?
The answer is no for that. The reason, because if you are the problem with the default is from your end. If something happened from a third party, which is natural disaster or eminent domain that you're beyond your control, yes, we do share in the loss proportionately to our percentage. But if the default is from your end, yes, we don't share. We actually, normally in a default, the house gets sold for less than the balance. Yes, we're gonna lose, but and you're gonna also lose, right? But we're not gonna share our more than that loss with you because we're already losing. But if something beyond your control, which is natural disaster and imminent domain, yes, we do share in the loss. And the same way applies if you decide to sell the house, we don't share in the profit with you because our agreement is for you at the end of the day to buy our share out. So when let's say an example of $300,000 house and you sell it for $1 million, we're not gonna come and ask you for the difference because our agreement is to buy that share from us. So what technically happened, you buy us out first and then you sell and all the profit is yours. So yes, if the default is from your end, we don't share in that instance. I can't remember the second question. I'm sorry.
So the second question was, is rent impacted by credit? And then the third thing was about the Freddie Mac.
Is rent impacted by credit? Oh, the profit rate is, has to do with four things. So you get the down payment, credit score, property type, and occupancy type. And that's technically the requirement from the investor. At the end of the day, we can find Muslim investors who can be more lenient on that part. They say, whatever your credit, whatever your down payment, we're going to get you, like, for example, 3%. So at the end of the day, we have to be able to sell our co-ownership to an investor. Therefore, we go by these guidelines. And what was the third question?
Remember, that question is Freddie Mac.
Oh, what about Freddie Mac?
It's associated with so back to that quickly. So high level, the profit is not rent, right? It's about.
It is an utilization fee for using our share in the house. It is not. I mean, you can call it rent, but it is an utilization fee. So you come in with us as a co-owner. You put in, let's say, an example, 3%, and we put in 97%. You will be using the house exclusively 100%. You're using your share and our share. So you're paying us for using our share in the house. And how do we come up with that formula? It is $1 a month, right? But at the end of the day, the government, in these federally mandated documents, want us to put it as a percentage. And that percentage has to be within the market. It cannot be beyond the market. Otherwise, it's considered to be high-cost loan or high-priced loan, which we cannot do. So we have to be within the market. Yeah. The last question is Freddie Mac, right? Yeah. How does all of it get into money that? Yeah, Freddie Mac deals with non-Muslims as well, right? Deals with regular banks, but it does not matter. So the contract that you sign with us from day one, with every aspect of it, non-recourse, share of loss in the case of an imminent normal natural disaster, a real partnership with creating an LLC and all that stuff, no prepayment penalty, stays the same from day one until you buy our share out. So it does not matter who buys it at the end of the day, if it's Freddie Mac or if it is Mike or if it's John. And an example of that, it's like when a non-Muslim goes to the halal store and picks up that meat, which is halal, it does not matter who picks it up. It's a Muslim, non-Muslim. That meat is halal because it went through the process of zabiha, which is facing qibla and saying basmala, and it has to be obviously halal meat, which is not haram. Is that answer?
I understand the concept, but the reason why I was talking about like the halal meat, for example, right? Meat is halal. I go and buy the meat with halal money, and then I go feed it to a Muslim, right? It's okay. No problem. But I go and buy meat with haram money, and then I go feed it to a Muslim, you're going to say there's a problem here.
So the money that's used, it's not Freddie Mac money. So when they do the transaction with you, Guidance Residential puts their own money in the transaction, right? So we're not lending money from Freddie Mac. Freddie Mac is not a lender and using that money. So we use our own funds. Later on, we sell our share with all the aspects of the contract, with risk and everything, to Freddie Mac or Fannie Mae or any investor who wants to, invest in these things for a profit. So this way we can liquidate our funds and move on. And going back to Freddie Mac, it took 19 law firms back and forth with Freddie Mac to actually take our program the way it is because of the high risk that it has on it.
While on the same topic, I think maybe like one follow-up question, we can come back and revisit this Freddie Mac and Fannie Mae. So when you talked about musharaba, right? So you cannot transfer. So in this case, like you have a partnership agreement, you can sell your shares. You're allowed to sell your shares to another entity. Is that according to AMJA, etc., is that halal?
Yes. We disclose it in our contract. We have the right. We put it in our contract that we may sell our share to an investor. So the only thing that we cannot sell, which is if we have a murabaha transaction, which is price markup, the problem with the murabaha, you're not allowed to sell it to a third party. You have to keep it in your books. And that's why murabaha is a very famous product overseas, because generally speaking, what happens is people buy houses, They stay in them until, until they die and their kids gets them in afterwards. And the banks actually have liquidity. Here in America, nobody has that much liquidity. That's why the government is in Freddie Mac and Fannie Mae. That's the creation of these two entities to provide this liquidity to all these financing companies. Yes, murabaha, you cannot sell a murabaha. The reason we didn't do murabaha, we could easily do murabaha, and we can, the problem with number one is refinancing. Refinancing it just because the murabaha is I'm buying this, let's say this house for $300,000, and I'm selling it to you for a price markup of $500,000. You're going to be paying $500,000 no matter if you pay it in 30 years or you pay it in 1 month. I cannot make it as an exception in an exception basis, which means a very rare exception. I can allow you to pay me back if you pay me back in a month, like let's say 300,000 or 310 or whatever. But I cannot do it to trick the Sharia aspect of it and say, okay, I'm doing with murabaha, but if you're going to be paying me, just pay me $300,000 or whatever if you pay me earlier. That is against the Sharia. And the reason we didn't do it as a company, not because of that. If the customer chooses to do that, which is not really financially speaking the best option, because most people in America, they either change jobs, they change states, they change cities, and refinancing, the minute you buy the house, you're underwater. So it's going to take probably who knows how many years to get your equity in a murabaha transaction. The reason we're not doing it as a company, because we cannot sell it. We don't have the liquidity to do that. If we sell it, we breach the aspect of Sharia. And that's why the Sharia board actually did the 3 transactions. They are the one who drafted the contracts, the murabaha, the ijara, and the musharaka. But we dropped the murabaha after the attorneys and all of this stuff that said it's not, you have to do it this way. And then it says, if you're going to be able to sell it, yes, we can do it. They said, no, you cannot sell it. And then we dropped it out. So that's why we just concentrated on the musharaka, which is the only permissible, I would say, transaction that could happen legally in this country.
No, Jazakallah khair. Now, one more question in terms of your investors, right? So you don't go get money now, which is a good thing you clarified. You don't go get money from Freddie Mae and Fannie Mac. You sell it to them after you have provided the capital, which is good to know for everyone, right?
Correct.
So your investors, the capital you're getting from, who are those investors? You financed about 10 billion, right? Already. So where is that 10 billion coming from on your balance sheet?
Oh, we liquidate it right away. So we have the money, like let's say we have $100 million, right, in our account. So let's say we closed this month 70 million, right? So we sell that right away. So we don't hold on it for a long time. Otherwise, we just have to wait for 30 years, close the door, wait for 30 years. And that's why he was saying about, housing in California, it's not scalable because it's just like a bunch of community members, and then each one waits for lottery to pick up. And that's the good thing about in this country about Freddie Mac and Fannie Mae. Without Freddie Mac and Fannie Mae, possibly the rate would be 30% today. Because banks does not have the liquidity, and with that little liquidity, they have to be picky and they can choose whatever rate they want. Home ownership used to be for the rich. Without the creation of Fannie Mae first, and then after the creation of Fannie Mae, they found out that it's still not a competition enough. That's why they created another government entity, which is Freddie Mac, to compete with Fannie Mae. So now there is a competition between those two companies.
So all you needed was the initial seed capital, and once you started selling those securities to Freddie Mae, Fannie Mac, you got the liquidity you needed to finance more.
And move on, yes.
Okay.
Yes.
So last one before I give it to you, Hasib. Your interest rates you talk about, right? It's not interest, it's a rent, right? And you calibrate it to understand in terms of the current market interest rate, right? So how would you say, if traditionally someone with a good credit history went to a bank, was able to get, say, a 5% APR on a 15-year loan, how would you, in terms of just to show that you're competent, right? Or whether it's 5.5, I know it'll be a little bit more because of the fact that you have other administration that you need to do for Sharia compliance. So is your loan that interest rate generally a quarter point to half a point higher than what typically someone would get from a bank?
I mean, it really depends. I've seen other quotes, so I would say we're in the middle. So we're with the probably in terms of pricing, maybe like Bank of America, Wells Fargo, Chase, we're similar. But I've seen, there is, I don't know, over 1 million mortgage companies in America. There's always someone's going to be cheaper than us, and there is other people who's going to be expensive than us. I would say we're in the middle. So it really depends on what program we could put you in. Unfortunately, we're limited. So we only have technically one program. So we don't have these FHAs and all these things that could work for people with lower credit score. So if your credit score is lower and you're comparing us with conventional banking, they're gonna put you in FHA, which is cheaper. So it really depends. Conventional banking have a lot of programs that they can do. Because of the Sharia, we're limited to only one product, and unfortunately, it could be expensive for some people, but it could be cheaper. I would say we're in line with the big banks. We could be cheaper in most cases than some of them, and we could be a little bit more expensive, but not like, extraordinarily like expensive than them. Absolutely, yeah. If you got a quote, you can always come up and we can see what we can do, inshallah. Right, Sami?
So there's a lot of questions. Could we get a quick show of hands if you guys are okay with delaying dinner until after Isha? Is that okay with people? We got a lot more hungry people, it looks like. who would rather we go like 10 minutes and then we stop it? Okay, I guess let's just go until Isha, inshallah. 9:15.
And also, you have an option. If you really would like to go and have dinner and come back, we are here. If you did not get a chance to ask us question, Nabila and I, we're gonna be here. We will stay here as long as you want. You can come to us individually, ask any questions you may have. So don't think that you have no more chance to ask us any questions if it's not now.
Assalamu alaikum. I don't know if this question has already been asked by anyone. I joined a little late, so sorry about that.
That's okay.
And it's very quick. You were mentioning that you have funds and you have investors who, invest in your company. Like a lot of Muslim people over here, they have funds and they want to invest, right? Nobody want to go into like CD and the riba kind of things.
Sami.
So, do you guys take investments? What are there like any percentages you have which you pay, or are you guys really insured? Like FDIC insured like 250K. So for depositors, like investors, are the funds, secure?
Thank you. So yes, we are open to investors. However, you have to understand how that has to be done. It's in the millions and billions. We have gotten this question. This is not the first time that we are getting these questions. Yes, we are open to investors. We're happy to speak with you. But you mentioned something that I must say, that there are other organizations who talk about the same thing, and please do not fall into that. Something I really want to clarify. I travel a lot, and I do see a lot of communities are being visited by banks creating a subsidy with an Islamic name. And then they're saying that, brothers, you could actually come and deposit your money. Once you deposit your money, we're going to take that money. It's called time deposit. And this money we use to finance homes for you. Sounds noble, beautiful, right? You love to hear that, right? But guess what? The fine print says FDIC insured, your money will be deposited with the parent company who is a riba based, and the owner is a Christian who sleeps at night. His priority is not for the Muslims to get out of riba, by the way. So you need to understand, yes, we are yearning for something like this. We as Muslims, alhamdulillah, we are doing great. We follow our faith and we want to do the right thing. Alhamdulillah, we have money, we have assets. Something that's the organization has always been doing. We have a R&D department, and we have employees, attorneys, being paid high salary just to help us to come up with a very strict, solid, Sharia compliant product for the Muslims to do investments. It's taking time. But we rather take time than take a shortcut and deal with something that at the end there's no coming back. But I know I gave you a long answer, but yes, there is, but it depends on how much. That's something that we'll be able to.
Assalamu alaikum. So I have a quick question, like for Freddie Mac, when you say is all your business model is only based on Freddie Mac? Let us say if there is no Freddie Mac or any other organization which you are following up, right? So are you in this business or you will be out of the business if there is no further say tomorrow Freddie Mac is not buying anything? Let us say that Freddie Mac is not buying your contracts. Are you still be going to be in this business? Second question is like, he already asked you about um, the risk factor, or let us say, because once the agreement is done, you are immediately selling the contract to Freddie Mac. So as a buyer, I'll be having a risk of defaulting. What kind of risk you possess other than the natural disaster or in terms of foreclosure? What kind of risk you have in this model? Based on that, you are claiming the profit basically. So, yeah, that's not my question.
So that's a good question. If Freddie Mac I mean, there is two investors. There is Freddie Mac and Fannie Mae. Without their existence, sorry. Your first question about if Freddie Mac or Fannie Mae does not exist, will we, obviously, I don't have a straight answer for that, but we're always looking for private investors, by the way. So we were very close, and we actually got approved by another private investor. But unfortunately, when we get to the details, it's not a Muslim, right? So it's a big, corporation here. When we get to the details of the contract, they're okay with the contract, but they're not okay with the word Sharia on it and all that stuff, because they don't want their name to be in Fox News or whatever, CNN the next day. If Freddie Mac or Fannie Mae does not exist, not only us, big banks, everyone is probably gonna, it's gonna be more expensive technically. It's gonna be back to prior to 1980s when the rate was probably in the 20s, because there is not a lot of liquidity. Yes, that's a very good question, but has nothing to do with your original contract. So it's not going to affect your contract. It's it's just for the new, our ability to to sustain and keep up. Without investors, unfortunately, we can't. And we were very close with a private investor from Saudi Arabia, but unfortunately, the Muslim investors, they don't like the long term, which is mortgages. It's 30 years. And when the market also was in the 3%, 4%, that's not a lot of, in big chunk for them. So that's why they stay away from mortgages. They go to other aspects of the, I can't remember your second question, sorry.
The risk factor, like, you are immediately selling, right? So the risk factor is, for me, it's apparent that you are not at risk because you are already selling the contract immediately. So is this in proportion to what you are claiming that profit?
No, everything stays. So the risk factor that you sign with us, the whole contract that you sign with us with every single clause in it stays the same until you own the home, no matter who buys it. Fannie Mae, Freddie Mac, Mohammed, Jack, whatever. It does not change. It does not change. It stays the same. We're the only company in America that shares in the loss. No matter what the others can claim, we share in the loss, meaning if something happened in these two circumstances, which is beyond our control, imminent domain, natural disaster, we're the only company that shares in the loss. Other companies may claim to share in the loss, but only up to their balance loan amount. So they do want to take their loan amount first, and then whatever left is your share. But in the case of a total disaster, imminent domain, there is definitely they're going to take all of it, and you're going to left out with nothing. But in our case, we do actually share with you proportionately to our percentage in the house at that time. And that's what our contract says. That's what the co-ownership agreement says. The other co-ownership agreement, the reason they cannot share, because any company that's owned by a bank or a which is subsidiary of a bank, number one, they cannot have a real partnership. That's the reason they cannot create an LLC, because banks are not in the business of partnering with legally, they cannot do it. Banks are not in the business of partnering with people. They're in the banks of lending money. So that's the reason we didn't choose that route. We could easily buy a bank, open up a window, and do that. But again, that's not going to be, we cannot create a partnership without being a private company. If we're a subsidiary of a bank, there is no way with us, way of having a real partnership.
Jazakallah. Assalamu alaikum wa rahmatullahi wa barakatuh. So I want to go back to that Freddie Mac, and maybe let me simplify this, right? Just to, again, this is I actually did finance my house with guidance, and I believe that the contract that you have with, between guidance and the individual person, that's Sharia compliant. So I get that. I think one of the common questions that I was asked when I went with it, right, was, okay, that guidance is selling your contract with to Freddie Mac, right? And that contract between guidance and the Freddie Mac is not Sharia compliant, because obviously the Freddie Mac is really creating those mortgages which are interest based, right? So can you really maybe clarify that, because that's really the common question that everyone is asking, and I basically cannot really answer that or explain that in layman terms. So if you could really clarify the contract that you have, guidance have with the Freddie Mac, again, that is not Sharia compliant, right? How you justify, given the guidance is the Islamic institution, that the contract that you're selling to Freddie Mac, given it's not Sharia compliant and that's being interest based, how you justify that?
So you're saying the contract between guidance and Freddie Mac is non-Sharia compliant?
Yeah, because when you are selling the contract, obviously Freddie Mac is really repackaging, as you mentioned earlier, and selling that as the mortgage-backed securities, right? And all those mortgage-backed securities, that they are really paying that interest to the investors, right? So the contract between you and the Freddie Mac is not Sharia compliant, right? Again, I'm based on what I understood. I could be wrong. So if you could clarify that, that would be good.
So I will start with an example. Let's say you and I decide to start a business. Let's say a hotel. And our agreement is we cannot sell any pork, no gambling, no interest whatsoever. Our business has to follow Sharia, okay? So it's gonna be a Sharia compliant business that we're involved in, and we're gonna move forward. But our agreement is that I am going to introduce a silent investor at any time that I like. And then that investor will have no say how the business is going to be conducted, cannot change our agreement, and will not be able to interfere anything as far as the business is continuing the way we have agreed. Now I go introduce an investor, whether it's a Muslim investor or it's a non-Muslim investor. Even a Muslim investor could be involved in illicit business or in a non-permissible manner. As long as the business that we have created and is not violating any Sharia compliant according to the scholars, it's fine. So that's exactly what we are doing. If we had the prince from Saudi decided to support not Citibank and invest into guidance, we would love that. But at this moment, we have an investor who is willing to buy our contract. And we also need to see the other way. As a Muslim, we should stand proud, say that we are able to change the lending and borrowing system in this country. We are able to finance a home without becoming a bank. We are happy that a contract like Guidance Residential, Musharaka contract, a non-recourse, we got rid of that lending and borrowing agreement. We are able to interject a Sharia compliant contract with fatwas, interjecting into the system. And tomorrow, if there are any other entities who are interested to invest into our product because it's very sound and it's less riskier, they would love it. And we also would love to sell it to them. We need to see the different way, right? So that's the idea. Yes, doing business. Our prophet did business with Jews, right? But and Jews did not follow Islam, but our prophet did not, compromise, his values, right? So doing a business with non-Muslim, doing a business with somebody who's involved in whatever, doesn't really matter. I'm not a scholar, okay, but this is what the scholars have given the right. Yeah.
Assalamu alaikum. Over here. I think it's important to note, because you could have chosen to leave the Amjad fatwa out completely, but because you did put it in there, I think it's important for people to know that the next sentence after they said the contract is sound in general, the next sentence said with some violations of the Sharia. So I think that's important for people to understand for full transparency, number one. Number two, I had a question. One of the examples that was mentioned was with regards to defaulting. If the home is sold at a profit, then the profit was, did you say is given entirely to the buyer, or split between you?
In the case of a regular sale,
A default.
oh, if there is a profit, so guidance gets its share first, and whatever is left is yours, because it's a default from one party.
Okay.
Right?
So in the case of when the same financial product is sold to Fannie and Freddie or whatever, when that is sold as a profit, is that shared with the buyer as well?
You get the question.
So your question is, when the property is sold at an event of a foreclosure, and if it's sold for more than what is owed to guidance, that complete additional money is given to the homeowner.
So okay, that's understood. When the same thing happens, or similar happens, that you're selling it to Fannie and Freddie, if that is being sold at a profit, is that profit being shared with the buyer?
Okay. Very good technical question, and I'm happy to go in details. I love the question, and I hope that you forgive me for going. If I go too long, just raise hand, tell me to shut up. So, okay, here. So, the simple answer is no, but I'm sure you know that, but you probably want to know why, right? So, here's an agreement. I'll give you an example. You and I were brothers, okay? Siblings, inherited a property from our family, and we decide, you want to buy me out, right? So now you want to buy me out, let's say $100,000. You're supposed to give me $50,000 of my share. And I say, you know what? I don't have 30 years to wait, and I want my $50,000. So I go to Nabil. I say, hey, Nabil, I have an agreement with my brother, $50,000, but every month there's the rent coming in. The total rent is going to be somewhere $30,000. Forgive me for the wrong math, but $30,000. Now, you're going to make $30,000. You really don't need the money. But you know what? Because I'm giving you an opportunity, I want to make $10,000. Are you okay with that? Are you okay if I don't share that extra $10,000 because I actually want to make some money? Are you okay with that?
I'm not sure I followed. I'm sorry.
So what I'm trying to tell you is that it's an agreement that we have, and I can sell it because I invested, and I'm selling a business contract, a share, one of the musharaka contract, and I can make profit out of. And that's actually an agreement that we can tell you that, yes, we're going to make the profit, but that profit we are not sharing because it's not shirakat al-aqd. If it was shirakat al-aqd, then yes, we will be making the profit with you. But it's not shirakat al-aqd, it's shirakat al-milk. So that actually does not require us to make the profit.
I'll go deeper on it.
Assalamu alaikum. Please, I want to ask this quick question. Since this model is based on partnership, and whenever there is maybe a sharing of profit and loss, is it based on the percentage, a certain agreed percentage, or a percentage based on us at the time where there is that profit and loss? Which of the percentages is used to share that profit and loss?
At the time of the event.
Yeah, because the structure of the ownership keeps changing when payment
Correct.
flows, some kind of inverse relationship, right? So I want to understand whether it will be us at the point of that sharing of the profit and loss.
Correct. So we share it proportionately at the same at the time of the event itself. So not the original one. Obviously, you've been paying and your share is up.
Okay, so just a follow up with a friend, like how do you share maintenance cost to the property?
Answer that? How do you share the maintenance, the cost of the property?
Maintenance cost, how do you share it?
So we do not share on the maintenance. And I'll go back to the same example of the brothers. If my brother decided to buy the house, my share, and he is going to take the ownership of the entire house, it's his responsibility to maintain the house because I'm not living in the property. So I should not be responsible to maintain the property. If this property was jointly owned for a business purpose, then yes, because it's a business ventureship. But when it's an asset purchase, then it's not shared.
I think we're okay. Jazakallah khair for attending this session. I hope you got something out of it. And the brothers are going to be here after Isha Salah. You can ask them all the questions you want. But just I have to say that this is one of the better products in the market that we have today for Sharia compliant financing. Yes, there are some doubts, right, that people have. But what we thought was it's good for you to understand, right? And the questions that you asked, they were all great questions. So feel free to talk to them at length and they'll try their best to clarify. But remember, because they're making some fee, right? They're able to finance more and more people, right? So they are actually benefiting a lot of families, 10 billion in financing that they've provided. So we have to help them move towards more Sharia compliance, right? So inshallah, if you support them, hopefully they'll get there. So you can ask them all the questions you want. With that, Jazakallah khair for all your time and all the questions that you answered.
Assalamu alaikum. So we have dinner. We're going to have salat real quick. If you don't have wudu, go get wudu. After dinner, we need your help. We have a program here tomorrow. We need help to arrange tables and chairs. Please don't leave without helping us, inshallah. Allahu Akbar, Allahu Akbar. Allahu Akbar, Allahu Akbar. أشهد أن لا إله إلا الله